This is Martin from Sept, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at technical charts and try to understand the market, what exactly happened in the previous week, and also plan for a better trading week for the upcoming week that's starting from tomorrow. It's Monday, September 29th, 2025. So let's get into the charts first. This is the weekly view of Nifty that you see left side, and daily view is what you see in the right side. You can see that the market was actually trying to move up for the last 3 weeks, previous 3 weeks, and last week it has given up that, and then we have a very solid red candle that you see there, and price is moving within the trend line channel on the weekly. And in the daily on the right side, you see that the price had been consistently falling almost all days in the Nifty, and it has done that after hitting the top of a trend line channel with a double bottom breakout attempt which failed, and looks like it's heading to the triple bottom, making a triple bottom, and there is also a trend line, another parallel trend lines bottom. And Banknifty ascending wedge on the weekly, looks like it's heading towards the bottom, where ascending wedge on weekly and daily charts it's within a trend line channel and a parallel trend line channel inside that, and price seems to be heading towards the bottom of the channel. Let's see what exactly happened. So Nifty had a big fall after 3 weeks of recovery attempt. Solid green candle suddenly turned to be very solid sharp fall, sharp red candle, and 675 points. It's 2.66. That's a big cut. Remember, the maximum correction that just recently done is 17.23% after a 72% kind of rally in the last 2-3 years. And Banknifty also did the same. It's ended abruptly up move and fallen sharply with a negative 1077 points. It's nearly 2%, 1.94%. And both the dice are closed below the 20 exponential moving average. Remember, the correction in the Banknifty has been only 12.5%, and there's a big rally. So what does the candlesticks indicate? This is wide range bearish candle that you see here. Same with Banknifty also. And daily charts clearly showing fall with gap down falls every day. And Banknifty also, except for one day, Tuesday or something, expiry day. But otherwise it is consistent fall with Friday confirming that. Also make note that price may be moving towards the previous swing lows. That's close to the 24,200, 300 levels, and that will be a place where support could be found. Same with Banknifty also. The price could be moving below the 50,500 nearby zones, and then also could be the supports may act in that place. But otherwise, bearishness in daily and the monthly, no doubt about that. Wide range bearish, strong bearishness. So market had been trying to recover after a small correction of nearly 5 or 6%, and 3 weeks it has been trying to move up, as you had seen, but it failed miserably, and Nifty's 7th consecutive red candle got formed, and such a big fall it was, and it has lost all the exponential moving average supports also. But there is a possibility of it finding a support, as I said before, because previous lows and consolidation and all that is very close by. Now both Japans show contraction, not a bearish expansion on the downside yet. So contraction with a bearish bias, because that's what both Japans were daily are indicating on the Nifty and the Banknifty. So that's about the chart patterns and candlesticks and all that. Now let's move into see how the momentum and the trend indicators. RSI is the momentum indicator and trend is ADX. So we are doing a multi-time frame analysis, and you can see clearly that the trend has taken a bend, hitting the top resistance at the 60, and able to break out from there, and able to sustain the momentum, and on short term and medium term. On the medium term, basically on the left side you see is medium term charts, weekly charts, it's showing that sideways and falling. On the short term, it's hit the bearish zones like it's Nifty and Banknifty also it's sideways. Overall, the momentum is sideways, but how about the ADX? That's the trend indicator is continue to be bearish. Actually, the Banknifty in the weekly time frame showing some bullishness. It's not crossed over the bearishness yet. But that strength is also falling strength. So it's a bearish trend as per the ADX and the sideways momentum overall. Right, except of some bearish momentum see in the short term. Slight slip from the sideways into the bearish zones has happened in Nifty's daily charts. So that's bearish again. Overall trend got hit and the momentum also got hit badly. Now the VIX has been in the lowest levels, even it has fallen below the 10 also historic low levels, and premiums hardly any premiums are there. Now look at what has happened. That is expected. Whenever price falls to this 10 and below levels, any time premiums will not have any value, but any time the volatility expansion can happen, and that is exactly what happens. It is 15% nearby of spike that has happened last week long following the Trump trade tariff news that came in, and 11.43 is a 15% fall from what it was earlier. So that's a spike in the fixes. It means the fear and the greed has come in back after that being dying down the last several weeks, and now the fact is it's even then it's still at lower which it has not climbed to the 15 levels yet, so which is okay, but what volatility the market faced last week was very big volatility, as it is 15% of fall of spike up, actually not fall. Now moving ahead to try to understand the opportunity analysis, you can see that it's a short build that has happened on Friday on the futures OI, and for the options OI for the September 30th monthly on Nifty and Banknifty, both if you see PCI is bearish on both 0.5 and 0.6 Nifty and Banknifty. So bearishness is reflecting in the opportunity as well. Now look at this. The options data can also be used to understand the support and resistance level. So it's a narrow range of 500 points. 24,500 is where the highest put writing, and 25,000 is where the highest call writing you see. Second highest is the 24,600 and 25,100 where the highest put and call writing you see. So very narrow range of 500 is what the option, because it's just one day. If one day is done, then Tuesday have the expiry. So after the expiry, move to Tuesday. The levels obviously will have a very narrow range because most of the decay has already happened. Now the Bank Nifty, the 54,000 and 55,000, that's a 1,000 point range where the price is expected more as per the big players for short sellers. And second highest is at 53,000 and 55,500. So the second highest put and call writing or the support and resistance let's see. Now the support resistance can also be found by technical analysis, different factors like market levels based on the previous swing highs, swing lows, and rounding numbers, gaps, and Fibonacci levels, and exponential moving average, previous swing lows, and all of those. So that's marked here in the two Nifty and the Banknifty. So accordingly, the first major support is 200 exponential moving average, which is at 24,400 nearby levels. That is breached. There also is a confluence with the Fibonacci 38 level. So 24,000 is going to be crucial. There's a gap also coming that with there at 24,300 level. So 24,000 support, if that is breached, then we can expect price to take some support at the Fibonacci 15, the previous swing lows that comes at 23,869. If that is also breached, we may have trouble. Hopefully that does not happen. Upside, there is a gap that has formed at 24,891. So the major price right now, the major resistance that could come into play, you see the exponential moving average of 2050 and 100. So that's at 24,747, 24,992, 24,000 is called this major resistances on the upside. 24,900 also has got resistance because it's a 100, it's 50 exponential moving average. So 24,747, 24,915, 25,000 nearby, or 24,992 to be precise. That's all resistance forms, and supports we already seen. 24,000 is the big one. So that's about Nifty in the Banknifty. You see that the major resistance would again be the 20 exponential moving average zones that comes in at 54,902, 54,964, and 55,160. So 55,000 is going to be a big major resistance on the upside, and after that the previous swing highs at 55,835, 56,000 rounding number, and 56,151. That's the resistance on the upside. So this zone at 56,000 is going to be very crucial to take out. Supports first would be that 200 extension moving average is going to be major support. That's at 53,785 zones, and if that is breached, then we have the previous two lows at that comes in at the 53,561 nearby zones. So this gap, then 200 extension moving average, then there's the previous swing lows, and then breach of that parallel channel would mean that price can fall into 52,000 as well if that parallel channel supports are breached. So that's the levels. All these detailed levels are marked in here. You can make a note of that. Let's move it. Now the sectorial watch. So if you try to understand the different sectorial major indexes, you can see that the IT got badly hit. Pharma also really got badly hit because of the Trump tariff news. So right now IT was trying to move up, but it is the sideways and it has fallen down, but not at fallen to the zone set on the medium term charts. So, right, there is a range shift. There is a possibility that IT index can find some support and then bounce from here also, right? Because there is a range shift concept that's in the momentum. If you are not sure about that, check out the playlist. 50 metal index also is doing good, but it is taking a different bull zones. If the auto is also bearish handle, everything is bearish handle. All candlesticks are heavily bearish candlesticks, definitely. And what has really badly got hit is the pharma, which has made a 5% cut, in reality, which has made a 6% cut. Even after the 2.5% cut, 2.75 big cut in auto also. Metal was least hit 1% cut only, but IT, look at this, 8%. IT and pharma got really hit, and none of these sectors have any scope of taking long positions because momentum is bearish or sideways, not ready for long calls. Now, right, so it is hanging, means all the sector indices, medium term is hanging on the sideways, it does not fall into the bear zone set, but it got really hit bad, especially the IT and farm. That's in a nutshell. Now, industry heavyweight stocks that contribute maximum. If you try to understand HDFC Bank, solid red candle, but it's a support zone. This could be a CIP change priority bounce that could happen from here, and if that breaches, then it will be heading towards the bottom of the trend line channel. And also see this red candle, sideways momentum, and HDFC Bank also solid red candle, sideways and falling momentum. So all three major heavyweight stocks hit badly. IT index, obviously it has fallen bad. It has fallen to the bear zone, so the case back once again in the case of TCS, and Infosys is hanging on the sideways momentum. Kodak is a contrast stock. It used to be swinging up and down within the range, and that's what it's doing. You can ignore that. ITC is also showing a red candle. There is a probability that you can find some support in the RSI 40 and then spend some time there and bounce up from here. There is a possibility of a range shift or divergence also that will work here. ITC weekly charts is what you see, right? So all the sectors are hit badly, IT especially, and the heavyweight stocks like Reliance, ICICI Bank, and then the HDFC Bank have also done that. So heavyweight stocks hit badly, sectors hit badly. What about the mid cap? There is also solid big fall, sideways, exactly at the breakout point in the RSI 60. It has taken a bend and reversal from the right way, solid reversal. That's what the broader market is also showing. So overall, no doubt about the bearishness. So why has this happened? Because the FIs has been selling nearly 20,000 crores of cash selling, and the domestic institutions have been buying. That's why market is not cracking down. So to compensate, they had done the buying of 174,000 crores. So the net longs on the derivative side is also moving down. So the betting is also moving downside. So FIs are selling, continuously selling. They never had been buying, but they had reduced, but now they have increased once again to 20,000 crores kind of selling. The other way to understand the market is to understand the commodities, the currencies, and the global markets. Let's start with the currencies. So dollar is spiking up, not that great. USD INR currency has spiked up 0.64%. That's not good for an emerging market like ours. So rupee has become all-time low, 88.63, very bad. Crude oil spiked up 4.6%, which is okay. 65%, 65.18 is okay. But crude oil, as you see here, it has been, oh, it's not here. Crude oil is near the 60 range for a long time, which is good for oil importing in a country like ours. Now this is the US dollar index. You can see that it has been falling down, but it seems to have found some support at the very bottom, and once again it's spiking. But look at the USD and our rupee, all-time low rupee. Now crude oil is okayish. Gold is at all-time high, despite the market falling. Gold is all-time high is okay for hedgers, but gold is falling high means market participation may reduce. Is warning that it gives probably, right? But otherwise, that's the story. Now, if you look at the global markets, the Dow Jones, they all had hit all-time highs, but some profit booking seems to have come, and the Nasdaq and the S&P 500 are also showing some flattish redness, which is okay. We have to wait. Although rupee weakening is the threat, otherwise things look okay. All right. Now that's about the analysis. Let's talk about some actionables. Actionables doesn't mean that these are recommendations, for education purpose only. Trading is all about risk management, your risk and not my risk. You have to do your analysis and trade according to what it feels like, or what is your capital, and you are for responsibility for doing that. And here we have two stock actionables: trend, Tata's retail arm, big red candle, and there is a possibility that it can head low towards the bottom of the trend channel. Big volumes. Trend is bearish, and nominal amounts of bearish. Price pattern, trend, volume, everything negative. So it could give you 1:2 RiskReward. These laboratories, another sector that got clearly hit bad. Solid reversal candle, and this is at the RSI support. There is a possibility it can bounce up from here, but if it doesn't happen, you have 1:2 RiskReward. Have tight stop loss though. Based on both tradings, good volumes, good bearish momentum, and then bearish trend and big candlestick fall. And how tight stop loss is this? Okay, that's about two actionables, both on the short side. One is the farm sector, one is the IT sector. Now, this is an FNO strategy actionable, again, not a recommendation. Now, I have taken the 7th October because only 2 days more for this current September 30 expiries. So, this is a bad strategy as usual. We're taking inside hedges and selling OTMs outside. And no additional wing support or wing hedging is not done here, so it's not fully risk different, partially risk different, you can say, but probably seems to be good. And the range is reasonable of giving 25,250 and 24,000. Hope is that 25,000 may hold good. Doesn't hold good, just take the happy lows and come out of it. Don't try to adjust. That's a FNO strategy. Let's try to wrap it up. So market gave up 3 weeks of upside, and suddenly just made a sharp fall, and big sharp fall, and closed negative, 2.5% more on the nice, and near 2 to 2.5% of fall has happened. But that's nothing compared to the 17% kind of correction that has happened. The 72% of rally that has happened in the last 2-3 years. Now, when we try to understand what the market view is to put in different buckets of the bulls and the bears, the parameters that we're showing. So, bulls have very few things left there, except for the CIP bounce possibility that we talked about, and the DFX still at the low voltage regime. Other than that, all the factors in favor of the bears. The market is bearish, and chart is shouting loudly and saying it's bearish. Candlesticks are bearish, DFX is spiked to 15%, momentum is fallen sideways, trend is negative bearish, open interest futures is bearish, options is bearish, the bands are bearish bias, although it's sideways. Price is trading below the 20 exponential moving average. Indices are shown sharply, with those 3 sectors being IT, pharma, and realty, all of them heavily hit. 8, 5, and 6% is the kind of falls that have happened. Now, everything is bearish. Heavyweight stocks are all in the sideways momentum. Rupee is all time low, weakest ever, 88 point something, 6 or 7. FIs continue to sell heavily. Now, you can expect more volatility in the next weeks because US tariffs is not defined. The hope for a trade deal is there at the same time. New tariffs keeps coming, so volatility could be clearly seen in the next weeks as well. And so, stay cautious and have tight stop losses. Is the only thing that we can do of protecting capital. My view is mild bearish. because technically the market is saying it has turned weak, but you don't know whether this current support zones that we talked about is going to hold or not. If that breaches, then we have trouble. So always keep in mind that technical analysis is not sure, so 100% guaranteed support resistance levels story. No, it's not that. It's about probability, just probability. Black swans take out all that probability studies to, it says it doesn't have meaning if this black swan comes. So protect your capital and have risk management, that's key that it. So the next week I look forward to 23,800 and 25,500 the levels for the Nifty, and 53,000 and 56,000 is the levels for the Banknifty. So keep that in mind as long as the prices will close green above the 26,000 and on the Nifty and 50,000 and above on the Banknifty. We still may be consolidating or correcting time correction of what may be happening unless we close and have solid close above these levels. We don't have a rally until then. So always keep in mind, risk is all that trading is all about risk management, not risk. Managing the risk is the key, and hedging options is all about, variability is all about hedging. So hedge your portfolio, hedge your positions, and always hedge. Use hedging strategies to give and get rental incomes. And check out the playlist for more details on that. So I'll get you mildly bearish. Charts are technically bearish and turned weak. Very little things in favor of the bulls. Bear attack is intensifying. That's all I have for the next week. And if you like the content, you can subscribe and then you can give me your feedback and all that. And if you like, you can like the like button as well, and you can share it to your friends and colleagues and all. I'm active on X with technical analysis on a daily basis. If you want to subscribe, you can subscribe that as well. That's all I have for you. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.